It is 9:30. Let's kick off a little opening bell weekly recap. Nice to see everybody. Let's begin with a risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you can't afford to lose, whether trading stocks, options, futures, forex, cryptos. You know the risks. If you're following me on social media, best place to follow me is here on YouTube, youtube.com/Chris Pulver. Also pretty active on Twitter at Real Chris Pulver. If you see any other of the handles, whether it's Instagram, TikTok, Twitch, anything else, or just Twitter, even YouTube, Facebook especially. If it's a typo, if it's real with two L's, if it's a underscore, a hyphen, a number, it's not me. All right. If you're messaging me, I'll reply, but I will never message first and solicit. Sounds, scammy. It probably is. So make sure you kick off all those clowns off social media. Okay. All right. Let's jump to the charts. Let's get to it. Again, it's the 20th of January, 2023. We're live, opening bell. One stock I was watching all week is right here, Netflix. We did have positive earnings on Netflix. We can look at earnings whisper, see what they did. We had, I think it was the subscriber base is really where Netflix was jumping. So I'm tempted, and I'll talk about this at the top of the hour in the Equities on Demand trading room. I'm tempted to roll out to next week and see if I get a little bit more runway, if it's worth it. I'm going to look at it here. I can actually log in and look at it. Let's see here. Fourth quarter financial results. It says Netflix misses. Earnings of 12 cents per share, revenue 7.9 billion. Consensus was 47 cents per share, revenue of 7.8. So they beat revenue, but missed on earnings per share. But the subscriber base is what I think the market jumped on. They crushed it. I think they were expecting like 4 point some million. They came in with like 7 point some million. I'm not sure if it's going to show that here, but nevertheless, it shows misses here, revenue growth. So honestly, as far as the numbers go, doesn't look too great. But it was a subscriber base that I read last night on StockTwits, also a little Seeking Alpha. So I think it's in my best interest to probably, if I'm going to roll this one more week, I'm going to roll it to maybe $300 and keep it there. Maybe I can roll it down to $295 and just do the math, but I'm up for losing the stock today for about $30.05 profit, which is not bad. Obviously, I would take that. And then some other stocks I'm looking at today. KHC is down to $39.51. I'm going to lose it at $37.50 with a covered call. I also have a 40 and 41, which may or may not get called away, but I'll just hang on to it. We have a ton of credit spreads that are still looking good for profit. We'll review that again for class today. Currency-wise, it's been a pretty good day. We have New Zealand, Aussie on top, the JPY getting crushed. We did move our stop losses on CAD Yen short, which is good because it came back and poked our stop loss at +5. The Swiss is also a little bit weaker. I had a chart I'm going to go off overnight on the Aussie Swiss, the New Zealand Swiss, and the Euro Swiss. So those are all currencies that I'm pretty interested in. Dollar Swiss as well. I mean, I like the whole Swiss basket being a little bit softer. So Aussie Swiss, for example, nice little daily candle to the upside. We'll see if we can retake these highs around 6,500 and hit this yearly pivot. It'd also be nice to see, let me bring out my little drawing tool. And while I'm doing that, I'll log into YouTube and say hi to everybody and wish everyone a happy Friday. All right. We've got David in the house. Chris, good morning. Roz, good morning. Moch, good morning. Joe is here. Scott, Giza, Dan, Craig, good morning. Hey, what's happening, Steve? What's happening, Daniel? What's happening, Tom? How are you guys? Mikey, what's up? Jan, good morning. Greg, good morning. Tony's in the house. All right. Everyone tuning in. Let me get this out of the way. So if you're out there, say hi. Yes, good morning, good morning. Yeah, thanks, Mike. Mike's knowing that I'm right here with Benji. Yes, indeed. He was at the office with me late last night. He was not happy. No, he was just bored. Morning, Helen. Morning, Rich. Morning, Catherine. Okay. How's your face, bro? Is it filled with food? All right, you're just going to sit tight. Okay. So what I was looking at here, I just want to draw out a little bit on the Aussie Swiss. Some of these Swiss pairs I'm watching pretty closely. Give me a second. Benji wants to say hi. You might hear him in the microphone. Give me a sec. Okay. All right. Get off my headset, bro. So possible crown pattern. If we have a nice reversal here, if we have a previous high that's been taken out plus a trend line break, this is a pretty textbook looking crown. If we have this right tip forming, I'm hoping that we start to see some symmetry to the upside. back to this level, back to some pocket areas, and we'll just look at a simple measurement. So that's the pattern I'm looking for on Aussie Swiss. If we drag a fib swing from low to high, we pull back towards that 618, and a couple spots I can look for. We have the 127 and we have the 1618 extension here around 67, which is not too shabby. So I would certainly take that. If there's a 5-wave move coming, if we have wave 1, 2, 3, 4, 5, great. Come back to this area, find this pocket between 67, 68. I'll be pretty happy with profit on the Aussie Swiss. Also, that's a positive rollover trade. CAD Swiss, I got filled at a nice little bottom right in there. And same thing, if we have some divergence at this low, I'm not quite, starting an equal low is one thing. I was actually talking to traders this week in Flex. If we went a little bit lower, I was looking at this as a potential, head and shoulders or crown pattern reversal, which might still be in the works right now. There's a nice yearly pivot around 7150, and this big old profit window, pocket window around 72 to 7300. So again, I'm kind of actively looking for some bullish patterns. If we hold this low, this may turn into a double bottom. So that means that we push back up towards this high, and we break this high, and we just double that move, which gets us back into that profit window like I have circled. So the hold for me for CAD Swiss is up into this green zone between 72 and 7300. The Euro Swiss traders that have been with me in the Flex Room since last year especially know that this is an ongoing saga. Chart alarm set at the high. We did have price close back above a 4-hour trend line area on Masterflex, so we're back into the green. There's also a nice trend line here that could be a bullish channel. So if we head back up to the highs, we might see this. We might see some channel action. I still think we're going to hit this pocket, possibly a run to 105. And that's going to be profit. I mean, if we hit 104 to 105, I would be very wise to protect my profits. And anybody following along, we've been eyeing those levels for quite a while. Anything else on the Swiss? I have some pound Swiss exposure. We're trading at 1400. And, nice little breakout here. Highs around 15 and change. One thing on the daily time frame, we're sitting right here. So this 200 exponential moving average, if we can break these highs, we might look at the same thing. We have a swing, some equal lows. If this is a, 1, 2, 3, either this is sideways for longer, or we're going to see this thing break above the 200 EMA and get some risk on rally towards 120, which is ultimately my profit target, coming back towards this yearly pivot, lots of breakout points. So I'm trying to hold long pound Swiss towards 120. New Zealand Swiss, pretty promising looking head and shoulders. Right in here, left shoulder, head to neckline, right shoulder. So if we can spend some time breaking this area, we can spend some time breaking above 6,000. I think some positive rollover and some lift out of China might help these commodity pairs, New Zealand, Aussie, pound, CAD, and we might see a nice little measure move towards 64 to 6,500. So I do like long New Zealand Swiss towards those levels. And then dollar Swiss has been beat down. Fed's about to raise rates in a couple weeks. A nice bullish candle to the upside. And we're going to see if the Swiss or the dollar Swiss can take out a previous high. So again, if we have a low in here, let's work our way back up to one of these highs. I'm actively looking for a bottom. And if we have a left tip, center tip, right tip, look for a bottom. Take it back to this pivot cluster. Take it back to this big pocket between 97 and 98. I really like that dollar Swiss long. And I'm prepared to take that a little bit lower if I have to. Okay, if I have to, 9,000 down to 8,800 perhaps. But if we start putting in some lows now, this could be a nice little run for Q1. Okay, let's see, double tops in the 4 hours. I'm just going to say this on the JPY crosses. Be careful. If last year wasn't an obvious lesson of how careful to be on the Japanese yen, I don't know what is. And I say that from a trader that was stupid enough to fight some of those JPY crosses. I got myself in trouble on dollar yen and Swiss yen, and even though the technicals lined up, I still got myself in some trouble. Took some losses, had to work my way through it. It took months of losses, and it took months of gains in order to wash some of those bad trades and get rid of some of those drawdowns. So net, Swiss yen was positive at the end of the day with a nice little run towards 139. The dollar yen was positive down towards 130. Which was a great move. And I was out way earlier than that. Dollar yen, I was out, pretty much here around 135. But we were also getting some highs around 150, adding some trades around 145, got out around 135. So all in all, pretty good run on both. We're able to make up for some of those, nasty drawdowns. But look, dollar yen is a good example. If we do not break this trend line, okay, if we do not break this trend line, technically I would just look to fade that, right? If we stay on the left-hand side of the trend line that I have drawn, I would still sell the dollar yen. I think we can sell the rally, but I'm just telling you, be careful, right? If it's volatile where it comes up here and then rejects, then you sell high, stop loss right above this area and see if we take out the lows. The big kind of accumulation zone would be like 120 to 118. If we come down to 120 to 118, I'm way more interested in waiting for a trend line break and starting to look for some buy trades on the dollar yen. But if we're on the left-hand side of the trend line, I'm looking to short the dollar yen. And I think we're just going to have some back and forth movement. I mean, if I could go back to my currency strength chart this week and I could go back Monday through Friday, we would have, let me try to match the color here. I mean, we'd have the JPY down here one day, down up here the next day, down here one day, up here the next day. It's literally been back and forth. And so you look at a chart, JPY has been down and up and down and up and down and up. It's a mess. It's so again, there's good volatility on the JPY crosses, so it's possibly interesting for some intraday trading. Let me check one website really quickly and see what we have for daily volatility. Let's go to since we're just a couple weeks into trading for this week, I'll do a 2-week average. So I'll do a 2-week average, and let's see what our highest movers are for the week. Let's see, let's go 2-week average. 2-week average. Okay, so there's our 2-week average. I'm going to try to sort this by pips. There we go. Okay, so I was just going to say this is not a surprise at all. Take a look at our high volatility pairs. Pound yen, dollar yen, Swiss yen, euro yen. So the 2-week average of volatility, these have all had the highest daily trading ranges. Okay, so that means if anybody's interested in some day trading, and again, this isn't easy, right? I mean, the times in which this moves, we had a huge move. Was it Tuesday to Wednesday? Overnight when the BOJ had their economic outlook report and their rate decision, and they had some comments dropped to the market. We had a 5-minute move that was, I think dollar yen alone was like 200 pips in a 5-minute move. So that's probably given a little bit of bias to this high volatility, but nevertheless, an active window. The London session, that Euro open into the U.S. session, there's some good volatility in these yen crosses, so possibly some day trading opportunities there. And that's honestly right now, that's probably as comfortable as I'm going to get with yen crosses. Trade some of the flow. Jump in here. If I could grab 20 pips out of 190 pip daily trading range, I consider that a win. Or find an entry that's precise enough that I could move my stop loss to break even and let it run for 40, 50, 60 pips with a trailing stop loss. Try to grab some of this move. But point is, there's a lot of volatility in these yen crosses, and even CAD yen, 130 pips. Aussie yen, 115 pips. I mean, these currency pairs usually are not that active, but they certainly are right now to kick off the year. So that trend might change eventually, but I think if the market is looking at some policy shift for the Bank of Japan, we're going to continue to see some high volatility. Okay, like I said, if you look at a price chart, I mean, it's not easy. I mean, the pound yen is a good example of how sloppy and crappy it can be. Here's pound yen. Look at the 4-hour time frame. Is this easy to trade? Yes or no? Okay, so this move, down, little pullback, that was a pretty easy sell trade, right? But then up here, down here, up here, down here, up here, good luck. There's no direction there, right? So if we have this holding, then yeah, we can look for some confirmation on smaller time frame, get some precision, trade this back down. But you're about getting entries in here, moving stop losses to break even quickly, and then trying to move your stop loss and let it trail. Comes back down to this level, great. We're sitting here around 161. We have levels here at 156. That's a 500 pip area that the market might cover in a couple of days. So if anyone's interested in high volatility, those yen crosses are giving it. And it's 4 of them, right? Pound yen, dollar yen, Swiss yen, euro yen. Honestly, I would almost steer into these 3. I would rather go pound yen, dollar yen, euro yen. I would probably skip the Swiss yen for right now and maybe stick to that. I think, pound yen, euro yen, probably decent volatility, dollar yen as well. But right there, I mean, almost 200 pips a day on all 3 of them. So I think there's some pips up for grabs on some of those high volatility crosses. All right. Anything else? I know I just have to be mindful of the time since we started this opening bell stuff on Mondays and Fridays. The equities on demand class at 10 o'clock comes up nice and quick. So, Aussie CAD, we took some profit this week. Aussie Swiss looking better for a potential crown pattern to break these highs and continue. Aussie Yen sloppy. Aussie New Zealand we stay out of this week. We looked at a sell trade on the. Did we get filled here? I know we had a couple of sell trades I set up. It was either a breakout sell trade or it was a pullback towards 69.50. So I don't think we were filled yet. We're looking at either a break below on Aussie dollar or a pullback and a swing to the downside. Also, our Euro New Zealand should be favoring the downside as well. We sold the Euro New Zealand, and I can check my flex stock here. So if I go new flex, put out some of those entries that we talked about this week and got in. So here's my trade log. We were in Aussie dollar sell, Euro CAD sell, Euro New Zealand sell. We sold it at 69. I need to, I'll log in here a second. So we sold it at 69 and we're trading at 68.37. So we're up about 65 to 70 pips on the Euro New Zealand. And we're going to look to see if we can fall back down to these range lows, grab some profit. We're right here at that yearly pivot. So 66.50, that's not bad. Grab 250 to 300 pips out of that. I would certainly take that. What are the trades we have this week? Euro pound small sell trade. What's on top today? Euro pound are pretty much neck and neck. CAD yen, this is over. We got knocked out here at break even. We moved our stop loss to like +5. Pound Aussie, this was looking pretty good. We did move our stop loss to like +50. 76.25. Pound Aussie trading at 78. So we're still up about 200 pips on that pound Aussie. We're gonna hang out of that one. New Zealand Swiss looking good. Dollar Swiss looking good. Euro Swiss looking good. Dollar Sing, I haven't checked on that one yet today. Dollar Sing is hanging in there. I've got a long position. I'm looking for a nice little trend line break. We have some divergence. We might end up popping this one down here towards 130, which I have another entry. But you can see pretty simply left side of the trend line, right side of the trend line. I'm looking to trade up. There's a nice yearly pivot. This also is a midpoint. If we have major support at 1.30, major resistance at 1.44, split the difference here at 137. So this pivot happens to be 137.60. So 137 to 137.60, great spot there. I'm looking to build more on that dollar Sing to the upside. Okie dokie. So that covers some currency stuff. Stocks and options. Alcoa, we're climbing back a little bit. Apple, we're hanging in there. I'm trying to think of some other ones. KDP had a big drop this week. We're at 34.24. We have some credit spreads in. I'm going to try to own some KDP down here in the low 30s. KHC is still dropping. But like I said, I could get it called away at 37.50. Netflix, I'm going to look at a roll situation today. If I could get another, I don't think this is going to drop $40 by next Friday. So I might roll this one more time and keep the $300 call. I might roll it up a little bit. But I'm curious to see what a $300 call looks like to the 27th expiration. If I could lower this by another $5 or $10, I will probably do that. That'd give me another $1,500 to $2,000. So actually, if you don't mind, I'm going to look at that right now before I switch gears over fully into stocks and options. So let me get logged into my Schwabi account. So I'm going to look at a roll situation. And anything else? Yep, Netflix, we're good. Donna, do you have Netflix with me? I know we had a bunch of credit spreads. We took some profit on this. These credit spreads were fantastic. I think we ended up collecting. So we had one contract in, 2 credit spreads. I think our max profit was going to be around $600. And we closed out for like $520 earlier than the expiration for today and way earlier than the March. So we ended up protecting about 80 to 85% of the profit pretty early on. And then the shares that I took some assignment on. By the way, I started buying some Netflix in here. Thank you to trading options because my cost basis is now 270 and I'm looking at a nice little profit on it. So I'm going to take a sniff at a roll situation. I'll do that right now with you. And let's see what that looks like. So here is a little Schwab action. There we go. Okay, I'll bring this over. So Netflix, I have, I'm gonna have to do a custom 2-leg trade because I'm gonna basically roll a call. So I have the $300. This is a sell to open, so it'd be a buy to close. And if I rolled it out to next week and kept it at $300, and I sell this one, I could roll that for a whopping $1.20. Are you kidding me? Oh, that's garbage. Could I roll this down? So this is what I could do. I could roll it down to 295, and I would collect $6.62. Now, the reason I would consider this is, can everyone see here that the difference between a $300 call and 295 is $5? And I would get an extra $1.62 credit out of that one if I wanted to roll it out the next week. So let me try one more. I'm curious if this 290 call is worth a bunch. I could make $1.25 here, or I could make a dollar. Okay, well, this is totally 290, 250. So let me go to 295. So I can make $1.40, $1.15, $1.25. So it looks like my best option here. A couple of things. I could roll it up to 302 to get another 65 cents. It gives me over $3 of extra profit. I could roll it up to 305. I'm not doing that for a debit, but it looks like it's going to charge me a debit to do that, which is not, I'm not doing that. I'm not going to increase my cost basis. The 302.50, they're going to ask me to do a debit there. If I could get a credit on this one, maybe. If I keep it the same, I just have to make sure that's a credit. If I rolled it for $1.70, that's not bad to keep it the same. But is it really worth it? I mean, it's 300 shares. So let me do the math here. Is it worth it for $1.70? Let's say I get $1.72, 300 shares. I get $500. Today, $300 minus 269.95. I get 30.05 a share. I'm at 300 shares. I get $9,000 back. Plus, so I've got $9,000 in profit coming today on Netflix, and I also have $300 times 300 shares. I get $90,000 in buying power. So to wait a week, is $500 worth it to wait a week and grab an extra $500, or is it more important to me to get $90,000 in buying power? I'm just talking out loud here, but it's probably more important to get the buying power back. So I will likely I'll say that I'll put the Netflix to rest, and I'll use that 90 grand for a lot more credit spreads and working some costs elsewhere. So anyway, that's food for thought. So we'll talk about that in 5 minutes when we switch gears to stocks and options. Any final requests for me today? XLU chart alarm just went off. XLU is pushing down pretty aggressively. Let's check some of the sectors actually. XLF, this is financials. We're flat. XLB is materials. 81.29. Speaking of materials, FCX has been copper play that's been crushing it. We have some CENX, which is aluminum, which is hanging in there. Alcoa had a miss in earnings, but I'm looking at some dip opportunities to buy. I might put in a 51 by 50 credit spread in Alcoa if it dips a little bit lower since earnings are out of the way. I'm looking at some ownership in the low 40s to mid 30s. If we also stagger out some credit spreads, then up and away on a potential. I mean, this could be, although it's an awkward looking one, this could be a head and shoulders right here. Even though I hate that it does this with this high, but this could be a head and shoulders right here, where we might hold this level, pull back on the dip, and then we break the neckline and off we go. We still have some gaps and pockets. We have some nice pivot levels back here around $70 to $75. I do think the material play is a pretty good one for 2023. So I might look at a 51 by 50 today, and let's do some staggered credit spreads. We can obviously take some paper cut losses if it goes down. We can take some ownership where we like it, but I think options are the way to go. Okay, let's see here. Been trading micros and futures evaluation through the Apex trader account for $50,000. I got to get 3,000 profit to move to the next account this week, up 627 pips. Awesome. Quick analysis on Euro Aussie, sure. Euro Aussie, we did some analysis on it this week. My goal on Euro Aussie was this. I don't like where it is right here. I like the buy area around 5,300. So it's 5,300 to 5,250. That's a nice little support zone to buy. There could be, I mean, this looks a little bit awkward, but there could be a head and shoulders here. But I wouldn't necessarily say that's the top. If anything, here's what I'd trade. I like 5,300 for a support trade, and I like the highs up here around 59 to 6,000 as a resistance trade. So if it comes up into this window, I'm looking to sell the Euro Aussie. If it comes down to this window, I'm looking to buy the Euro Aussie. I think we're going to get into some range trading. So right now, Euro Aussie, no trade. If it comes down to support, look to buy. Comes up to resistance in this area, look to sell. In the middle, stay out. That's my thought. Okay. All right, everybody. Any other questions? So this week, by the way, I'll show this. It's been a pretty wild week. If I go into 120, for example, so this is tracking multiple accounts, but I had 169 expirations this week to manage. Now, I'm not waiting till the last minute to do that. We've been super active this entire week. I think we did a great job in equities on demand taking care of our positions. Case in point, here's what it looks like. This is our posts from this week of all the stocks that we've managed and closed. Majority of these were in full profit. There's nothing we have to do. Some of these we closed early for profit. Some we closed out to February, March. We had a lot of profit collected this week. So all in all, pretty good. Let me see something. Can I maybe show a custom date on this? If I go to accounts, go to realized gain loss, and I'll just track for this week's trading. Let me see if I can do, can I do a custom date range? Let's do since we started the year. Since we came back live. I mean, my live session started on the 11th. So is that right? 4th? Yeah, I think I was live on the 11th. So we'll just do this. And this is just for one account, but we should show some pretty good gains here. So short term for the last couple of weeks, $900 in credit spreads for the most part. This is open positions. So this isn't realized, by the way. This is what we are looking at for actual gains and credit spreads. I know in my Netflix, for example, and KHC, I'm going to get those called away for. In fact, KHC, if it stays above $40, I get that called away for like $900. So all in all, I mean, I would say that we've done a pretty good job. And again, if I have any equities on demand students, chime in and type in the chat. But we've had a pretty active week. I keep saying this when we have these big monthly expirations, we pile up a bunch of expirations. We are busy, but I think we just chip away all week and we stay consistent. We stay, motivated to keep reviewing our portfolios, and we do a pretty good job. So, Alcoa looks like the dollar yen chart. That is, excuse me, that is not a correlation I would think of. Alcoa looks like dollar yen. I don't think so. What do you see about Alcoa that looks like dollar yen? I don't see anything. I mean, dollar yen has been once we turn, dollar yen has been steady to the downside. Alcoa looks like we have a little bit of reversal pattern. Plus, we have big support down here. So I'm way more bullish on Alcoa than I am the dollar yen. That's a funny comparison. All right. Anything else? All right, it's 10 o'clock. I'm going to wrap it up. So short and sweet, little opening bell, little weekly recap. Nice to be with everybody this week in the trading rooms. Flex students, good job. I know that this week my robots did pretty well. Let's see here. Perfect Storm, I know is running. So Perfect Storm, I talked about it yesterday. I was up like 1,100 pips. 362 for my Perfect Storm. I'm just going to add this up really quickly. So 362 for Perfect Storm. I've got a Perfect Storm Pro running as well. That closed out for 357. I'll take it. This is better than yesterday. 357. And then I have my Pockets Pattern Pro, if I can spell it. Pockets Pattern Pro closed out for 548. 548. So 1267. That's another 200 and some pips from yesterday. So 1267 on the week for some robot trading. And my discretionary trading, I don't think I took any profit. I can double check though. I did not take any profit. So I'm just holding positions and scaling back in. I know I added a couple on Euro Swiss on dips. I added a couple on CAD Swiss and Dollar Swiss. But I'm just going to hold tight on some of those positions and collect that sweet positive rollover. Okay, so good stuff. Congrats to all the traders out there that had a good week. I know we had a good week in the trading rooms, and it was a busy week for stocks and options. And it's just just beginning, right? So keep in mind, we have one more week of freedom before the Fed on the 1st. So we survived some earnings plays this week. We survived CPI last week. We had some Fed talk this week. They're pretty much in agreement with that 25 basis points rate hike. I'm still not totally convinced that the bulls have control of this market. We're trading at 390. Just real quick before I switch gears, this zone right here is kind of a stay out zone. Okay, there's a lot of volatility where the bulls and bears have to decide. If the bulls can convincingly break above 410, I think they can run. If the bears can break below 380, they can run. Right? So inside there, it's just going to be a bunch of noise. So let's just make sure that we're neutral enough that if we do break to the downside, we can follow that. If we break to the upside, we can follow that. Right? So as far as the directional play, if the SPY's breaking out, that's going to give us some decent runs. And I would expect some trends and breakouts to follow along. If this takes until, let's say, middle February, late February, we get into this March, April, May, that pre-summer push. Whether we have bulls or bears, we'll find out. But we'll certainly navigate it in all the trading rooms, and I'm happy to help. So light on the attendance today, which is kind of disappointing, but appreciate everyone being here, everyone checking out the recording. Thanks a lot. Make sure you hit that thumbs up button for me so everyone tuning in. If we've got 500 people watching at the end of the day, or over the next couple of days, make sure if we have 500 watchers, let's get 500 likes. Okie dokie. Other than that, happy Friday. Have a good weekend. We'll be back here on Monday for more Pulver Report at 9:30 a.m. Eastern Time. Little opening bell weekly kickoff. Okay. And Equities on Demand students, I'll see you in the trading room right now. Thanks. Bye.